Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 28th of July, and we had another up week for the markets, excluding the biotechs, which continue to be amongst the worst this year with just about a 1% gain. Financials up 2% year to date and lost a little bit of ground, and bonds lost some ground as well. So let's take a look at these charts and make some sense of it. Here's the daily chart on the left and the 30-minute time frame on the right. So basically what we're looking at is about this much data right here, magnified with 30-minute time frame on the right. And on this daily chart, we're still clearly holding this trend line, the rising 20-day moving average, the rising 50-day moving average. And when we back it out to a weekly time frame, we continue to be in a strong bull market. And this week, we saw a little bit of hesitation with that. But after the Federal Reserve announcement, which when we put an anchored VWAP right there, often we see that the anchored VWAP from the Federal Reserve will provide support or resistance, but we saw a lot of volatility around there. This big gap up, strong sell-off, and then gap up. It's positive that we're holding on to these gains. Today we traded what's known as an inside day. That simply means that Thursday was an outside day. Today was an inside day. And what that means is today's range was completely within the prior day's range. It was inside of that range. The prior day was outside the previous day's range. So a lot of people, read into those one-day candles. I tend not to pay too close attention to that. To me, it's more about how the whole picture comes together. And when we look at where we sold off to on Wednesday, it came down right to this low that has been important recently. So that level is going to continue to be more important over the next couple of weeks. Next week, we're likely to see that the 20-day moving average rises up to that level as well, and that might add some significance to it, meaning that it can either, the more time support is tested, the more likely it is to fail. I'm not calling for that to happen, but if it's to do something like this, then perhaps we see another drop down towards this level. Right now, we have to look at it as innocent until proven guilty, because the longer term time frame takes precedence, and the longer term time frame is decidedly bullish, and that's true for the Nasdaq as well, which closed at a new high here for the year on a weekly basis. Looking back to the two time frames here, you can see we found and held support right in here, that 375-ish level right in here. So let me just clear all this out. This 375 level held, and that's right here. I was thinking on Thursday that maybe we were going to see a little bit of a rally up and then come back down. I'm sorry, for today, that we were going to see a little rally up. Maybe it trapped under the 5-day moving average and then declined, but the market gapped up and held on to its gains. So you've got to be impressed with the resilience. And once again, that also comes right at the rising 20-day moving average. So I like to use the combination of simple moving averages along with multiple time frames and anchored VWAPs. What you see on these charts is what I use. I look at volume as well, but I'm more interested in the combination of price, time, and volume with the anchored VWAP. So the Nasdaq, as long as we're above 375, I think you've got to give the benefit of the doubt to the buyers. The Russell 2000, we're seeing some volatility in here as well. We're up at the top end of this range, and that tells me, as I've said I think last week, that we've got to be cautious up here, because this has been a level where this market has turned away from previously. And similar to the last two tests of this area, it was preceded by sharp rallies. So I would have liked to seen maybe something like this rally up, see a week or so of lower prices and then be able to continue to move higher. But the market not doing that and coming back from this sell-off tells us there's still a strong appetite for stocks. So it might be that we just correct a little bit more sideways through time rather than a deeper price correction before building the energy to make a break higher on this weekly time frame, because again, we're up at this level that has been important as for terms of support and resistance, back to early 2022, and then this, mid to in late 22 and early this year as well, and now here we are in that level once again. So it's kind of the better scenario, again, would be a pullback, build some energy, make another higher low, and then build the energy for a break higher. That's what I'd really like to see. The market doesn't care what I want. So right now, I'm still looking at this just with a little bit of eye of suspicion. We've seen a lot of stocks this week with great earnings reports and movement after them. So Roku, for instance, was a great one here just today. But recently, we've also seen a lot of stocks get hit on earnings. PRFT was in a nice uptrend, closing in on 100, and it dropped down to $63 per share. Crocs was one that was starting to turn higher. It was back above the 20 and the 50-day moving average, but it was below that 5-day moving average, and then it just got the snot kicked out of it after earnings here. INMD looked like it was going to hold on to those gains after the earnings, but that one failed as well. This one I got stopped out of, as I mentioned on Twitter, right over here on this day. I was very happy to be out of it before the earnings report. And, little part of me wished I'd still had it right here, but it was nice to be out of it when it was falling as well. So that's one I'll continue to keep on my radar. But, you look at a lot of these stocks and you have to look at them and say, a lot of these stocks might have gotten a little bit ahead of themselves with these big rallies from 8 to 14 in shares of Snap. And then the earnings came out and it got snapped. Spotify, same story. It got maybe a little bit ahead of itself with these constant uptrends, gains in here. It broke below that 5-day moving average. The 5-day moving average was declining. Don't buy stocks with a declining 5-day moving average. There's dozens of examples. CMG is another one that, prior to the earnings report where it gapped lower, it was below a declining 5-day moving average. So, when I look at the Russell 2000, it tells me just be a little bit cautious. We've got still a lot of earnings reports due out next week. You want to be aware of that. Each day for subscribers, all the stocks that we're involved in, I talk about the earnings dates. I put them on our spreadsheet. So again, I wanted to remind you, you've got basically a week left for that sale. Normally an annual subscription to the premium service, which has daily stock trade idea videos. That video is about 10 minutes each day. We cover anywhere from 4 to 10 stocks, and they're not necessarily trade recommendations, but ideas of here's what to look for. And they're really meant in an educational way, the way I do these videos. And it has the end of day video like this every single day. Webinars every other Monday, a forum, a midday video update, and then a half-hour one-on-one with me where I'll look at stocks that you want or lessons that you want. Most importantly, because there's two courses. One's a 9-hour course, one's a 3.5-hour course that I like people to go through before they take that one-on-one. Anyways, that's all just for $799. Altogether, I think it's $1,600 or something if you bought it separately, so about 50% off. Anyways, these are the things that I teach people at alphatrends.net. Semiconductors, as I've noted previously, we often see a pause or pullback at the all-time high, at a breakout like this, and we did see a pullback. But man, there's still a very strong appetite for semiconductors. And what's the reason for that? Is it because of AI? Is it because of EVs? Is it because of computers, phones, everything we use every single day? There are still, there's semiconductors in those, and these are leaders. As long as they continue to lead, I think you've got to give the benefit of the doubt still to the buyers overall, especially when, again, they're at all-time highs here. They're extended and they often pull back, but right now the ability for them to come back and from another test of that 20-day moving average, they didn't even close below it like they did over here a couple times, but instead it held that band of support and rocketed higher. So that's very impressive. Biotechs, man, these guys are just dead. I just don't see anything good going on in here. It's still in this big range. We talked about the possibility that maybe it could pull back and settle down a little bit, create a higher low over here. And I mean, in a way we did, but really I just look at this market on that daily time frame as more neutral than anything. We're right at the 200-day moving average. Again, my year-to-date anchored VWAP disappeared. It's somewhere right around in that area. So I just see a trendless market for the biotechs. If you're going to trade the biotechs, I wouldn't suggest you trade the biotech index, but instead trade grade each stock based on its own merits because, even in a neutral market, it means that some stocks are going higher and some stocks are going lower, and that causes the index to basically go sideways. So focus on the strong ones if you're interested in trading the biotech stocks. Financials still hold up, energy names still hold up. They're getting into a zone where it's likely some supply will be released. Again, we've got a lot of earnings next week, so just be careful. Don't if you've got doubt about your company before earnings, I'd say err to the side of the caution and sell it so to remove that uncertainty. Have a good weekend.